$3,400. Gold is above $3,400, $3,400. And boy, was I wrong with the last view at gold on the 9th of April over here, when I was expecting a bit of a bounce into a new daily cycle low, maybe only a marginal break before declining down into the intermediate cycle low. Instead, since then, gold has made 11-12% gains. Luckily, when I was reducing my precious metals positions near this top, what I thought at that time would likely end up being the intermediate cycle top, I only sold about perhaps 20% of my positions, still holding the majority of that exposure. And to be honest, I have been thinking to again start reducing that exposure drastically. Would I be buying now if I didn't have any exposure? No, I don't think so. What's been going on to gold over the last few weeks looks more like a bit of a blow off top. Look at the 14-day RSI. RSI is relatively deep into overbought area. Perhaps it's giving us a bit of a negative divergence. That's a higher high on price, lower high on RSI. Usually that does precede a bit of a correction. We saw that near the previous intermediate cycle top. And at the moment RSI is at the highest level all the way since a year back in March, April 2024. So while I was calling for gold at $3,000 and beyond over the last couple of years in my older videos, I don't think that gold is particularly cheap at the moment. Even looking at the timing of these cycles rather than the height of the price levels, this ongoing intermediate cycle is now 159 days long. Again, as I mentioned many times in my previous videos, these cycles usually last for around a half a year or so. So even if cycle stretches a little longer than usual, we perhaps have about a month or two before we'll likely reach that intermediate cycle low. And they do happen, even if the declines sometime are relatively mild, as we saw in the previous intermediate cycle, where gold price declined by less than 10%. Still, a 10% decline from current levels is a drop of over $340. And that's in case of a mild correction. Let's zoom out a little looking at the weekly chart, because on the weekly chart RSI is even a little more interesting because it's at the highest level all the way since middle of 2019, when RSI topped at 84.5 and we're currently at 82.8. And after that top in 2019, we did have a bit of a grueling correction down, perhaps not in terms of a vertical drop, where price only corrected by about 7 to 8%, but in terms of a duration, where we had to wait all through the August, September, October and into November to finally reach that intermediate cycle low. So RSI is at the moment quite high. I wouldn't really want to be chasing here. Let's have a look at something else besides RSI, and that's another very interesting indicator, the distance from the 200-day moving average. Dropping far below it, so the negative numbers on the lower chart over here shows that gold is relatively cheap, but when the price is a bit too high above the 200-day moving average, perhaps there might be a bit of a correction, or at least a move sideways to allow for the 200-day moving average to catch up a little bit. And looking at this whole bull market, going back to the beginning of this bull market in the end of 2015, when gold bottomed out at about $1,040, this distance from the 200-day moving average has never been as high as it is right now. The nearest it came to current levels was in the middle of 2020. And zooming in a little, again, remember in the middle of 2020 we had a very extended intermediate cycle that lasted for very, very long, and the correction here lasted for very long as well, again, all the way from August and into November. And while the 2019 decline from August into November only corrected by about 7% or so, the 2020 decline down into this extended intermediate cycle low dropped by over 14, close to 15%. And no, I'm not really saying that gold is about to drop by 15% here. Nobody does know the future. But based on the existing patterns, based on the cycles and market sentiment, I'm saying that I'm not really buying at the moment. And talking about sentiment, let's look at gold optics, gold optimism index. And as I mentioned in many of my previous videos, whenever we are in good times, as in say all through 2020 and 2021, a nice buying opportunity comes when the optics drops down to the level of 50 or so. Whereas during the hard times, as in say second half of 2022, a good buying opportunity comes when this optics drops all the way down to this green line at the level of 30 or so. Now we are in good times, we are in very good times for precious metals, specifically gold though. And while optics is at 77 right now, it's not extremely high at the moment, but looking at the last couple of months, we have seen again perhaps a bit of a negative divergence, a lower high on this optics. So yes, while in the short term optics can rise again towards that level of 80 or so, I would choose to be somewhat cautious, especially perhaps going into next month. Because while daily seasonality during the year shows that there might be a bit of a push higher, maybe sometime during this ongoing daily cycle, still we do observe gold decline quite regularly into May and June. Looking at these bars for monthly performance, May is relatively flat and June is negative. So there you are. Do you think I am a little bit too negative on gold price going into the future? Should I not reduce my positions even further down, although I am used to be more of a contrarian trader? Let me know down in the comments below. Make sure to hit that like button as well. Have a terrific Tuesday. Bye bye.